also to use the knowledge that we are collecting to support landscape partnerships across the planet, as well as financial institutions to design appropriate mechanisms to develop and scale landscape activities. We hope to work on a number of these mechanisms and to develop guidelines or support documents to help those who wish to use such mechanisms in understanding better in what type of landscapes and for what purpose this mechanism could be used. So you have responded to this invitation. So please, if you are interested to get in touch with us, do not hesitate to put in the chat a message requesting for us to get in touch with you. And if you have specific requests also, please do not hesitate. So the LANS mechanism. LANS means Landscape Enterprise Networks. So it's basically, it's a mechanism to coordinate action of private and public actors willing to promote and fund nature-based solutions in landscapes. So the LANS mechanism was created in the UK initially by an organization called Three Keels that you see here on the slide. And it was also created in close collaboration with Nestlé UK. It has been established already in the UK in 6 locations and is now entering a scaling phase in other countries. So the LANS mechanism, as you will see, is introducing very interesting platform approaches to ensure that those who are ready to pay for the transformation of landscapes and the implementation of particularly nature-based solutions are reach local actors who are willing to implement a number of practices or solutions that provide these transformative actions and ensure the landscape continue to provide the ecosystem services it used to provide. In this webinar, I have the pleasure to welcome with us Andy Griffiths, who has been one of the founders of the LANS initiative. Andy is based in the UK and is currently head of sustainable procurement at Diageo. I hope the pronunciation is okay, Andy. It's an organization working in the production of drinks or beverages. And what I can add is that Andy developed the LANS initiative when he was still head of value chain sustainability at Nestlé UK and Ireland. So before giving the floor to Andy, I would like to say also that this webinar is organized with the support of the finance design team of the 1000 Landscape program, and particularly the support of eco-agricultural partners. David Hecht and Shannon Sutherland in particular has been instrumental in putting this in place. And so the webinar will be in the first part, we will have a presentation, general presentation by Andy of the LANS mechanism that will be then completed by 2 concretely involved experts who will tell us more about what they observe on the ground with the Lens program. We will then have a Q&A session and aim to finish the webinar at 15 or 2:15 in European time, and 9:15 in Washington time. So we are now ready to start the presentation, and I give the floor to Andy Griffiths for leading us into the Landscape Enterprise Networks initiative. Andy, the floor is yours.
Excellent. Thanks very much, Daniel, and a real pleasure to be here. Before I start, just a quick point from my perspective. Obviously, this subject is quite deep. The way we've developed the Lens or Landscape Enterprise Network model is to ensure simplicity both for the funders and for the delivery partners. But there's obviously quite a bit of complexity contained within the model to enable us to achieve that. So please feel free, and actually encourage you to raise any questions in the Q&A or chat box throughout the session, and whatever we can't answer today, we'll make sure we come back to you after the session. So really keen to hear your questions and thoughts as we go. Again, another core component of Lens is, because it's structured as an independent proposition, our core focus is on transparency and working with others to help further shape and develop the program and underpinning foundations to help both drive scale and drive impact, as well as building the evidence base that underpins that. So without further ado, I'll jump into the main deck. So if we can move on to the first slide. Move on to the next slide, Shannon. That's great. So in terms of the core challenges that we've considered as part of this model, I guess from myself working in business, about when we started looking at this about 7 years ago, one of the core challenges was really, if we're facing into such significant challenges in terms of both nature and its degradation, and also the climate challenges, why weren't we seeing the scale of business action and investment to drive change at a landscape level? So we undertook some work to really understand across our peers, both within the agri-food sector, but also beyond the agri-food sector, as to why action wasn't being driven at the pace and scale required. And I think from that work, we found a number of things, but to a large extent, a lot of it was driven by the complex nature of the challenge, arguably the tragedy of commons, so this perspective of it being everybody's concern, but no one's direct responsibility. And also challenges in terms of how you integrate business prioritization and business investment to sit behind it. As part of that, we also looked at, well, how could we drive a shift in thinking and approach to really address some of those challenges? And I think the first one was, again, from a business perspective, there's always a tendency to break things down into simple components. But when it comes to nature and climate, the risk is that we end up starting to both bias towards particular issues or drive economic inefficiencies. So the first point was really to look at how could we bring together a model that looked at outcomes rather than purely practices, but also looked at outcomes on a very much an integrated basis, recognizing that if we apply the right systems thinking, we can deliver multiple outcomes in a very efficient way. The second piece was really a move to dependency-based thinking. So up to this point, a lot of work had been done around how you could use, for example, natural capital valuation to drive change. Again, very complex, quite difficult for many businesses to internalize, and also meant that different organizations perhaps didn't see it as a priority for them to move forwards. However, what we found is once you start to talk to organizations about dependencies, that identified a couple of things. Firstly, it helped us to start working with organizations to understand where their dependencies were within a particular landscape in terms of ecosystem services, what that meant for them from a risk perspective or potentially opportunity perspective. And then actually when you start to map those back within the landscape, we found that many of those different or apparently very different ecosystem service dependencies came back to the same principle, natural assets. So that enabled us to look at a model that would bring together a range of different actors across different sectors who on the face of it had very different interests, but in a way where they could co-invest to drive much more aligned outcomes within the landscape. The other core benefit is business intrinsically understands the language of risks. So positioning this work around dependency and risk makes it much easier for businesses to internalize, align against their business priorities, and then drive responsive investment proposals. So if we move on to the next slide. As a result of some of those insights, we started to look at, well, what does that mean in terms of practical application in the field? And using Hedgerow as the example, obviously there are many, but when we look at Hedgerow, perhaps many, particularly in Europe anyway, many organisations will see it principally as a field boundary. However, with all of the work that's been done in terms of understanding its potential for carbon sequestration and the growing interest clearly in carbon sequestration as part of our climate journey, that tended to be the primary driver of decision making. However, if we look at the right hedgerow in the right place, we can actually deliver a whole range of other ecosystem service benefits. Now that might be in terms of improved water quality, reduced flood risk, access for recreation and therefore mental health benefits, physical health benefits, as well as physical feedstock for other processes and other producers. And what this means is very quickly we start to see those outcomes and how they relate to other potential off-takers, whether it's water utility companies, linear infrastructure, local government, or even hospitality and recreation. So suddenly one intervention can deliver multiple outcomes which are relevant to multiple off-takers. And that provides an opportunity for significant stacked investment opportunities and real economic efficiency. So if we move on to the next slide. In summary, and obviously the document that Thousand Landscapes have produced provides some further insight into this, but the core elements of the lens model therefore are sixfold. So the first one is it's demand-led. So by the very nature of its name, we focus on landscapes. So we look at a geographical location. And then rather than looking at the challenges and how we build a supply-based proposition, what we do is go through that process of identifying key organisations who are likely to have a dependency on that landscape, and then work with those organisations to really unpick and understand what their dependencies are within that landscape and the ecosystem services it produces. And that really helps to build that demand-led approach. The second piece is it's multifunctional. So as I touched on before, this isn't a carbon proposition. This is looking at what are the dependencies of those organisations in the landscape and how do we bring those together? And like I said, they may be across water, they may be across carbon, they may be across, for example, recruitment and retention of staff or mental health delivery. So a real range of different outcomes, not just environmental, but societal and potentially in some cases, the opportunity to catalyse economic regeneration as well. So it drives a much more balanced approach to landscape transformation. The third one is collaborative. So as I mentioned earlier, the model is transparent. It's about bringing partners together, both on the demand side and on the supply side, to drive action. And that's really important. So it means that by bringing together different sector players on the demand side, we can drive real collaborative impact and an increased funding pot to support the transition. And then on the supply side, so effectively what a regional lens entity would do is bring those demand side players together. But what they would also do is bring together the supply side actors, so the supply aggregators. Those supply aggregators might be farming cooperatives, they might be local NGOs, they may be other community groups. But what the regional lens organisation does is it brings together those demands, effectively consolidates them, and almost manages it like a tender process. So going out to the supply aggregators, defining what those demand partners need and how much ultimately they're prepared to pay. And what those supply aggregators do is they define their particular proposition. So working with specialist advisors, they will determine this is what the farmers and land managers within our pool can deliver. And this is the level of funding they need to be able to deliver that. And that's really crucial because from a collaborative perspective, what's happening here is the demand side players are not telling those supply side players what to do. They're saying this is what we need. And then the decision making is put very much in the hands of those local communities, those farmers, those land managers. So driving real ownership as well as real transformation within those landscapes. So very different, much more collaborative approach to enabling change. The fourth point is business-like. So in terms of lens, comparison to perhaps some of the kind of governmental stewardship schemes that may be in place in many markets, where perhaps there are many boxes to tick and perhaps less clarity as to what's expected in terms of outcomes and how it can be secured. With Lens, the proposition is very clear. Like I said, the Lens entity goes to those supply aggregators, those farmers, land managers, determining what's needed. And then when the trade is concluded and agreed by all partners, there's absolute clarity as to what those farmers, land managers, supply aggregators are going to deliver and what funding they will receive and when it will be received and what the evidential requirements are in terms of underpinning that. Very simple, straightforward mechanism, and one that we've found with many of the farmers that we've engaged with in terms of the research that we've undertaken has been preferential for them. They understand what's expected and very easy to transact. The fifth point is organic growth. So we're not trying to boil the ocean. When we first start a regional lens proposition, we don't look to hunt down all organisations who have a dependency within that landscape. We'll look for a handful, perhaps half a dozen organisations within that landscape who are either key anchor organisations or have significant interests. Once we've established the first round programme with them, we'll then start to grow and bring in more players as confidence builds, levels of impact build, and then continue to grow impact through that investment strategy. And then sixth, and I've probably alluded to this throughout, the programme is very much place-based. So it builds around those communities, it builds around the natural assets within that landscape. And like I said, what we found is although the programme or the model was originally designed to enable the acceleration of environmental growth, what we've found is many applications where Lens can actually catalyse economic and social regeneration within those landscapes and communities. So if we move on to the next slide. So in terms of the way Lens works, it's very much a stacked and bundled based proposition. So we're able to gather together a range of different funding sources from different sector players. But because of the way the programme's structured, we're able to stack interests as well. So to deliver multiple outcomes, but from fewer interventions. And what we've found is that enables a clear route for different businesses to collaborate and co-invest. And also by driving a green, what I would call commerce around green finance solutions, so enabling in the first instance commercial flows into that landscape, it then enables investors and insurers to understand what that proposition is and start to look at how they may overlay their interests on top of that. What this doesn't do is potentially risk burdening that landscape with unserviceable debt. So it's very much about commercial flows first, and then further investment development that may sit on top of that. But as part of the work we did, particularly in the UK, we did some work with the UK government and a number of other partners, looking at how Lens could be used as a blended finance solution. And if you click once more, what we were able to evidence here is that Lens provides an opportunity both for business collaboration and shared funding. It also provides a real opportunity for collaborative public funding, so bringing local authorities together, potentially with the central government as well, but also the opportunity to bring both business and government together to drive real efficiency, both for the investing businesses to enable pace and scale, but also economic efficiency for the public purse as part of that transitionary programme. So a real opportunity, and it helps enable the development of policy and regulatory frameworks within those markets to enable those changes to take place, both in terms of driving efficiency, but also enabling the catalysation of economic and social regeneration. If we move on to the next slide. So in terms of the flows of funds through Lens, I talked about Lens having not just the global presence, but having regional Lens entities. So these are organisations, they're not there to replace NGOs or other organisations. Effectively, it's a special purpose vehicle to help construct the trades and bring together the different partners to enable that efficient trading marketplace and deliver impact on the ground. So what you can see here is we've got effectively on the demand side a range of different sector players coming together. They would work with a demand aggregator. In many instances, that demand aggregation role is actually fulfilled by the regional Lens organisation, but it has the potential to be split out, so we can manage it in either way. But that demand aggregation role is to bring together those different funds from the demand side actors and then effectively drive them through to those supply aggregators. So as I touched on before, on the supply side, those supply aggregators may be a combination of farming cooperatives, local NGOs, or other special purpose vehicles, and effectively upon delivery of outcomes by those farmers, those land managers, those other land-based players, they would receive the funding to basically reward for delivery. We recognise that the moment that in many instances the appropriate measurement or monitoring, reporting and verification tools aren't where they necessarily need to be in some of these spaces. But what we're able to do in terms of the contract development that we've driven is we're able to use some of the practice-based approaches as proxies for outcome. And where we have the contracts developed, it still locks in those outcomes and passes them back to the demand side funders. So ensuring that all players across that entire value chain are protected as part of this process. So securing outcomes and protecting individual parties. So a very efficient way of managing the transfer of funds, but enabling us to leverage that stacked investment opportunity. If we move on to the next slide. So we're seeing a range of different partners engaging. Again, I won't go through all these points on this slide, but we're seeing very different reasons in some areas for them engaging. So for business, it's very much around risk management and efficiency, but also building that evidence base to evidence that they're enabling impact. Farmers and land managers, it's very much around enhancing their business model and actually driving income diversification and building resiliency. For the public sector and the NGOs, primarily around the independence of the model. So this isn't a profit-making proposition. Lens is about enabling transformative change. And for society, again, shared agency, balanced outcomes, and the ability to rapidly scale within landscapes. We move on to the next slide. So in terms of programmes, Daniel mentioned we have 6 programmes in the UK. We're actually seeing a number of new programmes in development and discussion at the moment as well. Some of our earlier programmes in Southwest Scotland and Cumbria being well established and really driving a lot of the thinking and the development. So this has been very much a test and learn model as we develop and evolve and continue to evolve to ensure it fulfills all of the stakeholder requirements. And then we have other programs which may have been developed later but have grown very quickly. So, for example, the East of England Lens program, which has rapidly grown from first to second trade, both in terms of number of partners and scale of investment. And one of the interesting things in terms of scale and impact is we've seen through that program at the moment current estimates indicating that the financial value of outcomes from that program are circa 5 times greater than the funding flowing into the program. So again, a great example of as we grow these programs, driving real efficiencies to scale and achieve pace. And also beyond the UK now, we have programs in mainland Europe, so in Italy, Hungary, Poland, again, others in discussion and development at the moment, and also now starting to look at application in markets in the global south as well. Moving on to the next slide. So as I mentioned, Lens is an independent proposition, transparent, but also looking at how we can recognizing some of the gaps in in evidence base and in terms of existing models, really looking at how we can work with partners to close some of those gaps for the benefit of all in terms of transformation of landscapes. The first one is evidence-based. So we're great believers in actually initiating programs, working with partners who are prepared to lean in, bringing in a range of academic partners who we also work with to build the evidence base to help accelerate change in future. Second one is partnerships. So really looking at how we can use Lens to further leverage partnerships and put those communities and land managers at the centre of decision making. Helping to further refine innovative financing models and instruments that sit within this space. And then also the development of technology-based tools, but linking both technology with practical application to ensure that they're efficient as well as robust going forwards, particularly in the monitoring, reporting and verification space. And if we move on to the next slide. So in terms of next steps, first point, clearly to continue to scale our existing programs and build those through. We're seeing great progress in that space already, but a key driver going forwards. Looking at how we work to continue to build new programs. So again, identifying new partners and leveraging those opportunities in new landscapes. As an organization, we're looking to actually launch Lens as an independent entity, a purpose-led organisation with the intent of ultimately moving to B Corp status. So again, very much focused on that purpose-led proposition. And then finally, and clearly a key point for today, really looking at how we continue to build and leverage collaborative partnerships. From our perspective, Lens, like I said, is not a competitor proposition. It's a collaborator proposition. And this is really about how we can help the likes of yourselves drive further action, further engagement and leverage greater investment into landscape transformation. So they're the key components of Lens. Like I said, a fairly quick run through at a high level. Very happy to kind of pick up with people separately if more details required. But at this stage, wanted to pass over to two of our guest panelists today. So we have Amina, who is both the Director of Strategic Development and Stewardship at the Rivers Trust, but is seconded into that role. So has a role at one of the UK's largest water utility companies, United Utilities. So she'll be able to bring some context from a water perspective and a multifunctional landscapes perspective. And then we have Mark Brooking, who's Director of Sustainability at First Milk, a large dairy cooperative in the UK, who's also worked closely in the Lens development process and has some really extensive and interesting insights in terms of farmer engagement and farmer benefit in terms of driving this kind of approach. So first of all, I'd just like to kind of bring Amina to the virtual table. So Amina, in addition to your role at the Rivers Trust, obviously you also work for United Utilities, as I said, one of the major water utility companies in the UK. And United Utilities engaged really early in both the development and the deployment of LENS, particularly in Northern England. Just really interested to hear from your perspective, what were the main drivers behind this engagement? And how do you see LENS helping to address water challenges and perhaps broader challenges going forwards in the future?
Thanks, Andy. That's a really good question. And I think early doors, this was back in 2015, there was almost like a trigger for us in the north of England, which was Storm Desmond, which devastated quite a lot of the landscapes across the north, particularly around Cumbria, and particularly around the Carlisle area in the Eden catchment. So what we had at the time was almost like, and there's a pun in there, the perfect storm brewing, really, which was too much water flowing through the system, to the water system, really. A water company that was being asked to actually not look at flooding as an issue, because we're privately owned as water industry in the UK, but actually quite heavily publicly regulated. And the regulators, kind of the focus has been very much on water quality and improving water quality for supply of safe drinking water. So we had a lot of asks from the regulator in terms of developing more investment for water quality in that particular catchment in the north of England. But it didn't even make a dent on the whole flooding issue, and particularly on the aftermath of Storm Desmond. So what we had was the customers were paying for that heavy investment, which at the time sat around £20 million to actually treat for a total of about 2,000 people, which sounds quite excessive. They were being treated, they were being asked to invest heavily on assets to treat very, very small part of the catchment. And to improve water quality in a river that was actually flooding their homes. So there was a lot of issues involved in there. And it just didn't feel like, as custodians of the water environment, that the water company was actually contributing to the resilience of that landscape by doing more through an asset and engineered approach that actually wasn't doing anything to address flooding. And it really didn't touch on our strategy at the time, which was to look at catchments as part of the system and understand who are the various actors and the beneficiaries of that system, and where is the detriment to the system coming from. So that sort of triggered the work we did together, obviously, around LENS, and it triggered the water company and the regulators and the customers to look at new ways of working. And what we saw by looking at the system was that actually water quality wasn't the biggest risk to that catchment, and it wasn't the biggest, it wouldn't have been the best value for money for the customer, and it would add very little value to the other players in the catchment. So we went about, and I know there's a question around monitoring, and I'd like to address some of that in the chat, which was, where is the problem? It's a fundamental question, but the water utilities were not asking this question in a more integrated way. Where is the problem in the catchment? If it isn't on water quality, where is the problem? And what we did was baseline investigation, because obviously we're regulated, we still have to achieve water quality, we still have to provide safe drinking water. But it allowed us the opportunity to do some of those principles of LENS, really, collaboration being quite key to that. Ask other people where the problem is, ask the actors within the catchment, where are the issues? Where is this affecting your livelihood? Where is this affecting the resilience of that catchment? And the answers we got back looked very different from what the data and the modeling and the regulatory framework were telling us where the problem was. So there was a discrepancy in there, and it made sense because obviously flooding wasn't a priority for us in our catchment. Water quality was, and clearly flooding was a problem that we were all sharing. So that allowed us the opportunity to engage through LENS and working with others, the NGOs like the Rivers Trust, the Environment Agency as the regulator, local authorities, customers of that catchment, to look at what those solutions were. And certainly building bigger treatment works weren't providing customers with the flooding resilience, and weren't providing farmers with land resilience. So we're just providing a very little benefit for the water company. So it was an opportunity to look at those different solutions. And this is where we stumbled upon LENS and piloted that different approach, really, which was very much demand-led. It was, these are the business needs of the water company. And Nestle at the time had business needs related to the resilience of their supply chain, but actually resilience of their supply chain and requirements for water quality and resilience of that landscape are all the same thing. So it allowed us to look at those multifunctional solutions, really, that could tick the boxes for the businesses, and also for the aggregators of the supply side, which gave us very different solutions, and actually resulted in a lot of benefits for the business, for the water company, in terms of savings. I mean, these are real life savings in the order of 6, 7, 8, 10 million pounds of benefits we're still realizing as the Lens approach is growing in the Eden catchment. But more than the savings for customers, it allowed us to add to the natural capital resilience of that catchment. And I speak specifically about natural capital because we need to be able to measure these. We need to be able to quantify these benefits to be able to justify the business from actually doing a 180-degree change in terms of their investment proposition. So you need to be able to quantify that you're actually adding value and what are those benefits. So we've been able to monitor that. We've baselined it, and then we are looking at what is that value that we're adding by going this way instead of building more treatment works. And there's an in excess of 1.7 million pounds of natural capital benefits already that we're realizing, and we're nowhere near at the end of that project. This is in addition to the savings to the customers, I should say, plus all the other benefits that we haven't been able to quantify that we know we're delivering. That goes far beyond water quality. And I should say, in terms of our water quality requirements, which are, again, real, and we have to deliver because obviously it's a regulatory requirement, we've delivered 105% of those requirements by not building the treatment works. And it allowed us to innovate as well, because we could actually understand a lot more about the solutions we needed to deliver catchment resilience and develop fit-for-purpose solutions. Now, somebody mentioned monitoring, and that's quite a key point for a business like a water company in the UK, because if you're going to do something that's fundamentally different from an asset solution, which is what we've done through Lens, then you need to be able to record that. You need to be able to monitor and verify that it's continuing to deliver the regulatory requirements that the regulator requires. So the question around how do you price that up and how do you cost up, you need to include that as part of your solutions development. It needs to be included in the same way that the integrity of those solutions, and it's really difficult to do this with catchment-based approach and nature-based solutions, admittedly, but as you're developing and designing those solutions, and that's learned from experience, you need to incorporate the costing of monitoring the effectiveness of those solutions, the performance, the verification of those, and how you're going to report that back. And that's not just for regulators, but that's also for your business, but also for your investors as well, because obviously, whether you're getting the funding directly from your business managers or you're actually borrowing some of that money, it's really important to have that verification process built into your solutions delivery, really. And the operation and maintenance of those solutions actually needs to be included in your costing, just to make sure that you've got integrity and you're planting trees and you're putting fences that will stay there and be able to deliver those benefits for the long run. Because obviously, it's a different way of building solutions, but all of these things need to absolutely be incorporated into the design and the build and delivery of those solutions as well.
That's great, excellent. Thanks for that. I mean, that's great insight from a water perspective. And I guess similarly, from your perspective, Mark, obviously you're sustainability director at First Milk, one of the large dairy cooperatives in the UK, and First Milk's been actively engaged in Lens since the early stages. Again, similarly, particularly across Cumbria and also southwest Scotland. I appreciate we're relatively tight for time, but it'd be useful to really understand from your perspective both why First Milk engaged in those early days and kind of followed through with Lens, but also what do you see as the future benefits, both for First Milk as a dairy cooperative, but also your farmer members as well?
Yeah, thanks, Andy. Which is like, and certainly, as you say, we've been involved for some time, and I think you know, getting involved was a key part. Actually, like, you know, it was introduced by Nestle, which is obviously a key customer, so it was of interest, you know, from that perspective. But I think the one thing that we discovered very early on is actually is like that we're very much actually is like, you know, farmers cooperative, of actually is like embedded in communities, and therefore it's in our nature to actually work with you know, work with other people. And as custodians of the countryside, we have lots to offer. I think one of the first benefits that we saw, we'd actually seen, was the ability for knowledge exchange. And actually is like bringing together people from other industries, which would not necessarily as actually as like, you know, our farmer members would engage with, you know, is naturally was a key benefit. Likewise, actually is like, you know, bringing in actually is like academic institutions, and therefore having a science-based approach to this. And that's really is where we've kind of built on in enabling us to deliver in terms of, you know, various benefits. And it's not necessarily always the which is, you know, is you know, there's a lot of focus, which is like, you know, on you know, certain aspects of planting trees, etc. But once we got involved, actually, like, you know, we could actually see that how we could actually as help you know, prevent, which is, you know, floods or the whole water management, but also actually is like, you know, diffuse pollution, and therefore how farmers actually is like, you know, could actually help other industries, which is like, you know, is counter issues that they were actually is like, you know, coming up against. And clearly, as actually is like, you know, within the agricultural industry, which is like, you know, another you know, reason to get involved is an additional source of income for the farmers, which is, you know, that would actually be able to enable them to actually is like, you know, is diversify without actually is that changing farming practice and policy. I mean, some examples that is like, you know, that we would have done, that's just like, you know, it would be actually is like, you know, working with a utility company, for instance, is in terms of is to reduce be able to demonstrate on farm that we can reduce phosphate, which is like, you know, as far as which is like, you know, coming off the land, and therefore actually is like, you know, using that to offset actually is like, you know, phosphate from elsewhere. More recent developments actually is like, you know, it's becoming part of you know, government regulation, which is like it's saying that, you know, developments can't take place if until phosphate levels actually is like are under control, and farmers can actually is be used as a way to actually is like, you know, is to deliver those benefits, actually is like, you know, is to enable then for developments to take place in rural areas. I think which is like, you know, in terms of the future benefits with the whole regenerative approach, which I'd say is as a cooperative that we're taking, it's that holistic approach, and therefore I would say in all of our thinking of actually is like, you know, we need to be thinking about actually like win-win of opportunities here, and going down a regenerative farming approach for sure, whereby we can actually, you know, demonstrate that we can actually capture and store significant quantities of carbon, which has already been mentioned, but also actually is like, you know, water management. I would see actually well-managed soils can actually is like, you know, is as far as manage water in a far better way than actually is like, you know, unhealthy soils. I think which is like, you know, the involvement of other industries within agriculture is actually enables the pump to be primed as such to actually is like enable these things to actually take place at a far quicker rate than necessarily is like, you know, may I say is government regulation that can be quite a blunt and slow tool to make changes. And a big shout really, I think, is you know, and I would say this, wouldn't I, because I'm I work for a farmers cooperative, and actually is like, you know, but I think this cooperation actually is like is seeing, rather than being adversarial, everybody learns so much from everybody else, such as like, and we end up with common goals. And I think working together is actually like we're more likely to be able to end up with a climate solution.
Excellent, thanks, Mark. That's some great insights, and great to hear that both First Milk and its members feel like it's this kind of approach is really adding value and really helping to support progress, within those dairy communities. So yeah, thanks for that. Excellent. I'll hand back to Daniel to take the next steps.
Thank you, Andy. Thank you, Mark and Amina. Very interesting presentations indeed. And obviously, there are already quite a number of questions that have been raised in the chat. David, I saw that you wanted to raise some of these questions, or should we simply open the floor to those who want to ask their questions? Not sure how we can handle this.
Yeah, thank you, Andy. I think let's start with the responded questions in order received. And
okay,
one of the first ones was from Mount Everest Botanicals. I'm sorry, I don't know the name, asking about what stage of the initiation to look for funding. And so I'd given a brief answer in the chat, but would welcome kind of Andy or anyone, or Andy, just kind of sharing a little bit more about like how to ask for money, or kind of how to bring money into the equation.
Yeah, so that, being brutally honest, that was one of the primary drivers of structuring Lens, was to enable those funds to be made available to the delivery partners within those landscapes. We saw a real challenge for many local NGOs and even some of the larger NGOs in terms of trying to draw funds through. So in terms of the way Lens funding is structured, for regional programs, there are a few elements. The first one is when we initiate a new Lens program, then basically we leverage the interests of some of those partners, some of those funding partners, to help co-fund that initiation. The cost of the initial assessment and structuring that program is relatively small. It's quite an efficient process, so we're able to structure that first piece of work on a pay-to-play basis effectively. Then as we move forwards in terms of management and delivery of the trades on an ongoing basis, there's just a very small percentage cut that is taken from the trades, and that basically feeds into the administration or servicing of the program. But also the intention in the future, as these programs continue to grow, is to effectively build up a seed fund for new programs as well, to help accelerate opportunities in other landscapes. In terms of the other funding elements, so how do the supply aggregators fund their work? Because they obviously need to do some work in terms of bringing together the farmers, land managers, in the first instance, but also, although that supply aggregator will need to comply with the MRV requirements that have been identified by Lens, it will be the supply aggregator who funds those as well. But what the supply aggregator does is, when they build that proposition on behalf of their farmers and land managers, not only do they build into that the costs or the funds that those farmers land managers need to deliver, but they also build in their service costs and their MRV costs as well. So that is then built into the overall trade costs, so that the funds still flow through. Everybody gets the funds they need, cover their costs and other requirements. However, the other key component for Lens is, we're not just kind of sitting on our hands. What we're doing is actively working with a range of partners, not just to build the evidence base, but also to look at how we can enhance the MRV solutions as well, to both make them more accurate, make them more efficient in terms of the way they can be managed by farmers, for example, and less invasive, but also to make them more cost efficient. So one example in the UK is we're working closely with AgriCarbon, who's an organisation who can measure soil carbon for typically about a fifth of the cost of traditional soil sampling techniques. It's less invasive because of the way it can be managed. It can take samples, stratify samples over 3 layers down to 1 meter deep, so we can get really good insights in terms of, for example, soil carbon, and then can manage that in a very, very economically efficient way. What we can then also do is link that to some of the near-Earth observation, so we can drive even more efficient solutions in the future in terms of how we best balance both ground truthing and near-Earth observation technologies for efficiency. So that's an example of how both the funding is structured, but also how we're trying to further reduce the incumbent costs for the players within those programs.
Thank you, Andy. And I think that also addressed a question from Ivan that had asked in the chat about the cost of evaluation and monitoring. We did have another question, a rather quick one, about, is there a plan to scale the program outside of Europe into perhaps Africa or Latin America? So from another attendee.
So it's a very simple answer, which is yes. So I guess the key thing is, this is one of the reasons for trying to drive visibility of LENS. So LENS is a responsive mechanism. So we will, in theory anyway, we'll go to where the demand is. So if an organisation puts their hand up and says, we have a particular interest in the location, then what we're seeing, going back to that number around the value of outcomes being circa 5 times greater than the funding going in, because it is so efficient, we're finding actually the vast majority of opportunities are able to evidence the value that they can deliver. So we've found across the programs we've run, it's not been, I mean, carbon has clearly been a key interest, but we've seen a whole range of interests in outcomes that previously have struggled to gain funding. So in terms of some of the water-based outcomes, flood risk-based outcomes, but also biodiversity and habitat-based outcomes, which typically are the ones that struggle to find ways of leveraging funding to deliver transformation. So happy to pick up offline in more detail, but for me, so far anyway, we've seen a whole range of previously challenged outcomes from a funding perspective being able to be funded and delivered through this mechanism.
And there was another question, I think, that is related to this, which is, you mentioned also some potential blended finance approaches with the public sector. And I think there is a question in the chat about, are there examples on where this has been implemented? We know that it is very tricky. For instance, in carbon, it's the additionality principle that is very difficult to handle. So would be very happy to hear your views about this.
Absolutely, and it's an important component. So what we're really clear about with any of these trades is the kind of principal funding. So although the interventions may be common, the actual funding is for the outcome effectively. So we're able to partition who's funding which outcomes and therefore what's allocated. And what that means is, so for example, we may have multiple partners all funding a carbon-based outcome as an example, but all of that is partitioned to avoid double counting. If you looked at a lot of the trades, though, we'll see quite different interests in terms of outcomes. So, for example, some of the local authorities have a real interest in flood risk management, which they're incumbent. They're the incumbent responsible party. So that's one of the key drivers for them. It may be around local development plans, and in some markets, where you've got biodiversity net gain requirements that are mandated, the opportunity to leverage those. Some of those will fall on the private developer. Some of them, if it's public infrastructure, may fall on the local authority. And then the one that's probably the most challenging is when you're looking at central government kind of stewardship schemes. So we've done a lot of work with, for example, in the UK, Treasury and DEFRA, and Environment Agency, looking at how we can use LENS to enable the ELMS, which is the stewardship scheme, effectively, for want of a better description, to run in parallel with the private finance, and being clear about which funding pocket is funding which outcomes. So some challenges to get there, but now we've done that, we've been able to evidence that. And interestingly, again, I know a little bit UK biased, but the England Peat Action Plan in its Appendix A, which talks about funding of peatland transformation, actually uses the Lens model to differentiate how those different tracks can be managed. So it's not easy, but I think now that we've agreed the principles, we've got clarity, we're able to do it. The contracts are structured in a way which again underpin that. But inevitably, as we look into other markets, other geographies, with other regulatory frameworks, we may need to again further adapt to suit those local requirements as well.
Thank you. David, we still have quite a number of questions, so maybe we can continue. And for those that we won't be able to answer today, we'll probably see how to answer directly or after the workshop. David.
Yeah, thank you. There was a question on infrastructure. I just want to go back to this one. Pardon me, I'm a little behind. I was responding to questions in the chat here. Here we go. It's a question from Shashi about has there been attempts at the policy level to treat landscapes as essential infrastructure and then build a model of partnerships around the principles of infrastructure finance? And I think I have an inkling of what the answer might be, but as always, I like to kind of listen and learn. So Andy or Mark, I welcome your comments.
Yeah, and I mean, in my experience, typically not, or where it has been done, it doesn't enable the right kind of funding mechanisms or flows of funding to work. But again, in some respects, it'd be interesting maybe to get Daniel's perspective as well, in terms of the work you've been doing. Have you seen any evidence of that at all?
I'm not sure I have seen evidence indeed of this so far. And also the term essential infrastructure, we have a lot of terms which may mean different things in different culture: green infrastructure, natural infrastructure. But no, I have not seen this clearly addressed or implemented.
I think just one quick build on that though, which again, not necessarily promoting Lens in this space, but one of the benefits is by driving approaches such as Lens, I think and taking that risk-based approach, dependency-based approach, I think it will really help to shine a light on the importance of our natural landscapes in terms of its role from an infrastructure perspective. So I think Lens could potentially help enable the rethinking in that space.
I think I've certainly I've got an example which is like, which is very, very recent, which is like, so whereby we've been working on the Nestle milk plan. And one of the things that she's like was about protecting, which is like, is waterways. But also, which is like, so it started off with an initial approach by one of our members. And effectively is actually like in conversation with DEFRA, of actually that's been expanded out to actually encompass literally thousands of acres now, and they've worked together, which is like, so it's built so that they're protecting the whole wildlife corridor, so an entire of actually is like, is a waterway. Now that really was, I mean, I'd put that down to certainly as initiated by Lens, which is like, from that initiative in the first instance. We've certainly been involved, and me personally, and some of our farms have been in the pilot scheme for the SFI, so environmental incentive in the UK. And again, I would say is if you look at the development of that scheme, it's now looking at, rather than things as individual farmers, they need to get actually bigger blocks of land involved, rather than just have what shall I say, small pockets of land a long ways apart, such as like, so interacting together. So I think there are examples out there. But again, it's somebody needs to be the catalyst. I don't know, maybe it's different in other countries, but I don't think which is like, the government are the right people to necessarily bring people together in the first instance.
Yeah, and what I would like to thank you, Mark, to add also is that the landscape approach and concept and is still in its infancy in general. There are still a lot of things to do, and that's also the raison d'être of the 1000 Landscape program, to collect information, to share it across a large array of stakeholders and organizations, particularly also in the finance sector, in order to move in that direction of having landscapes recognized and as really essential infrastructures, as Shashi was mentioning, in order to facilitate also that programs and initiatives funds these landscape initiatives. And so this is really also what we are trying to do today with showing how Lens is working. We
Daniel,
still have
can I
other
just-
questions.
Yeah,
Yes.
Daniel, I just wanted to add real quickly, as a reminder for everyone on this webinar, we will be sharing a paper that we've written about Lens as a finance mechanism coming from 1000 landscapes from 1 billion people. It will be part of the follow-up email. I just wanted to highlight, we weren't able to get to quite all the questions, but hopefully that paper will be kind of another springboard for engagement and understanding. With that, I want to really thank Mark and Andy and Amina for their time today, and want to just invite the panelists for any final comments or kind of tie-up remarks that you might have.
I'll let Mark go first if you want, Mark. You're on mute.
Which is like, I thought I'd get away without hearing that today. Which is like, no, I think the final comments for me is that she's like, this is so important that she's like, as far as I would see it for our organization and for our farmers to be able to achieve sustainability targets, there's no way that individual organizations will do it alone. We need to work together.
Yeah, and similar comments for me. I think, if we're going to drive or accelerate landscape transformation at the required pace and scale that's needed, we really need to find ways of accelerating collaboration, helping organisations from different spheres to understand the dependencies on landscapes and then come together to enable that transition to take place. And I think, just along with all the other questions that was flagged, really understanding the business rationale and how those costs are covered, whether it's in terms of additional costs, but in many cases, it's actually about taking cost or risk out of those business models. So helping to clarify that so there's a clear and rational business value or organizational value in terms of driving investment.
That's a great synopsis. Daniel, if I could just add one thing from somebody working on a paper, it's not an accident that we chose Landscape Enterprise Networks as the first financial mechanism that we profiled. We really, its innovation and kind of its solutions, I think, are really worth a deeper dive. And with that, Daniel, I turn it to you for a closing remark.
Thank you. And my closing remarks will be very short because we are running out of time. So I would like to thank, of course, Andy, Amina, Mark, for their valuable contributions. Read, and to all of you, read the paper. Do not hesitate to contact us. And thanks also to David and Shannon, who helped really in preparing this workshop. So on behalf of the finance design team of the 1000 program, 1000 Landscape program, thank you all for your participation, and we look forward to other webinars in the future on other mechanisms that we will be investigating. Thanks a lot, and have a good day.
Thanks.
Thank you, everyone.